Hello everyone, Matt of Trades here. So today what I want to do is share with you a strategy that I've been back testing that ultimately would have yielded a return on your investment of 2,250%. Let me just double check that. Let's see. Yeah, 2,254% return on investment. And I'll go over exactly how that happened, but I'm going to share with you the strategy first. So I got Green Charts open right here. Green Charts is pretty sweet. It's free to use. Just have to make an account. In my opinion, it's the best charting software to back test. So when you open it up, this is what it'll look like. Just a single screen. Euro US dollar is what it'll start on. So this strategy was used. I back tested on gold. So first thing we're going to do is we're going to set up our chart. So we want to open up two charts, and we want a 10-minute chart and a 1-minute chart, and we want to make sure that both are on the pair that we want, which in this case is gold. Okay, so now I got a 10-minute chart on gold. This is giving you a sneak peek here. Let me get it. Okay, so this is what it'll look like at that point. So 10-minute chart, 1-minute chart here. This is where you would select your time frame. Okay, and then for the indicators on my 10-minute chart, I'm going to want a moving average. If I could find it, there it is. And I want that value to be at 200, so it's the moving average of 200. Okay, there it is. So that's all I need there. And then over here on my 1-minute chart, I'm going to look for an indicator called Trend Intensity Index. And then I'm also going to want a moving average of 50. There we are. I'm blind again. And that's already set at 50. And I'm going to go ahead and edit the settings on this one because it's a little bit hard to see this black line here against the night mode, so I'll go ahead and change that to green, and there we go. So this strategy is pretty simple and pretty mechanical. There's not a lot of subjective decision making. There is a little bit, but most of the time it's pretty much just do this when this happens and follow your rules. So we're just going to pick a random day to demonstrate a few trades. Let's just go back to, let's say, March of 24. We'll go the 11th. It doesn't really matter. Okay. I'm going to pull out our trade tool. And this is already set to gold. And we're going to just assume that we're back testing or trading a $100,000 account, in which case I want this to be 4.1. I'll go over the reason why. This is going to be 100 or 100, or sorry, 1 or 100 points or 100 pips. This one's going to be 4 or 400 points or 400 pips. So that's our take profit stop loss. And actually, I need to edit the setting here. I need to see my levels a little easier to make those yellow. Okay, so now we can see these lines a little bit easier. Okay, so basically what we're looking to do is to take trades whenever our green line here crosses one of these levels, either the 80 level or the 20 level here. This doesn't quite work like an RSI. Like this isn't technically overbought. This just means that if it's up here, the trend is strong in that direction. If it's down here, the trend is strong in that direction. And we're not really going to mess with our stop loss or take profit here. One more indicator that's hiding here is our average true range, and that's set at 5. Basically, the only thing we're looking at here is we're not going to take trades if our ATR here is above 2. We're just not going to mess around with it. Okay, and basically all we're looking to do, well, let's find an example. So when I'm starting at 7:30 a.m. and I'm ending at 9 a.m. That's Mountain Time, so it's starting at 9:30 a.m. Eastern Time. So 7:30 a.m. Mountain Time, and right at 7:30, if this is above or below one of these levels, I'll go ahead and make a trade as long as either this is vertical or pointing up for a buy, or vertical or pointing down for a sell. If this is above this level and pointing down, I'm still not going to take that trade. And the reason why I have these up is I just want to make sure that I'm not going to be fighting against this 50 moving average toward my take profit. And then kind of same thing here, not as strict with fighting this, but I just want to be aware of how the price action is reacting to the 200 moving average. And that's kind of where the subjectiveness with this strategy comes in, is, how just determining how this price action is reacting with the 200 moving average. And we'll probably come across an example where we might need to make some subjective decisions, but yeah, for sure don't want to make any trades where we're fighting against this 50 moving average. So, and this is the only time where we're going to take a trade when we're not just entering into one of these levels, is right at the 7:30. So we're going to go ahead and take a buy right here, because we're not going to be fighting against this level to get our take profit. And same thing over here, we're looking pretty bullish overall. So I'll go ahead and buy, and then we'll just forgot one more thing. So we're actually going to be taking two trades at the same time. So one of them with our take profit right here. So we'll do that, and then on the second one, we're going to disable the take profit, and basically we're looking for runners. And once we hit this level, we'll move our stop loss of our second trade at this break even here. So we're basically locking up some profits, and every once in a while we'll get a runner. Okay, so this one won. We can see that recorded right here, and our runner's still going. And we'll end the trade once this starts pointing down. So we'll keep this one going until that points down, or if we hit our stop loss, which is now where our entry was. Okay, we're just waiting for this to go down. And there it is right here. You can just barely see. It's not a bad idea to make this a little bigger so you can see better, but there we go. So that's the trade. So we'll go ahead and close that. And there you go. So in one trade, we made almost 2.5%. Now, this is one of the better ones. Not all trades are going to go this way, obviously, but let's look for another opportunity so you can see more examples. All right, so now we just crossed through this 20. So, in order to sell here, we're not going to have to fight through this moving average because it doesn't have to go that far. So we'll take that trade. We have plenty of room over here to move back to our moving average. So we'll go ahead and take this sell, and same thing. Okay, we already hit it. And then we did go back and touch our entry, which is our new stop loss for this. So we'll close that out, delete that, because that stopped out at break even essentially. So that is the strategy. You just keep doing that. Let's go to a different day, see if we can find something, a bit of a different scenario over here where we might be making some more subjective decisions. Okay, yeah, this is actually good. So right here, you can pretty much tell that this 200 moving average is resistance. Like we see a lot of rejection here, and we can pretty much assume, more times than not, I guess, that same thing is going to happen here. So we're actually getting a signal to buy right at the 7:30 here. We're not going to do that because I don't want to have to fight this resistance right here. So basically, I'm just going to click forward. Who knows? We might have won that trade, and we would have, but that's okay. So basically, now we're just looking for the next opportunity. So we want, move that down, and then we're going to look for that to move into one of those levels. Okay. So again, kind of keeping an eye here. This is probably going to be support now. So probably don't want to take trades that are going to go too far below this, which I don't think it will. However, this will be fighting against our 50 moving average right here. Let's just double check. Yeah, so that's going to be fighting that. So I don't want to take that trade either. So we'll just move on, look for the next. Okay, here we are. So this is looking like support right now, which is good. We just got a buy signal here. We're above our 200 moving average, 50 moving average. We're not going to be fighting against our 50 moving average in order to hit our take profit. So we'll go ahead, put in our orders, and then just click until either wins or loses. There we go. Okay, and now we're going to let our runner run. Okay, so right here it starts kinking down, so we'll go ahead and close it right there. So I've got an extra $303 there. So just after a few trades, we're at almost 3.6% return. So that's good. Now losses do tend to be rather large. Now I basically chose this as my I guess position size based off of trying to stay within parameters to pass prop firm challenges. Okay, so let's talk a little bit more about that. So pretty standard prop firm challenge is going to be a two phase. First phase you have to get an 8% return with a static 10% overall loss and no more than a 5% loss per day. Second phase is going to be 5% target, and again, a static 10% loss, no more than 5% loss per day. So if we were to lose, basically we're just going to stop trading for that day and go on to the next day. Otherwise, we're going to be in trouble of losing more than 5% per day. In fact, let me just see if I can find a loser here real quick so I can see what that looks like. Let's go for a sell, and hopefully this loses. It probably won't. Oh, maybe. Come on, I want this to lose. Okay, so that lost. So we're losing over $3,000 here, which is more than 3%. So if we lose two of these in a row, we're going to break that 5% loss per day. So if we lose one, we're just going to go ahead and stop trading for that day, and then just move on to the next. Now, also, if we, it helps us stay within the parameters, making sure we don't go below 10% overall. So this would allow us to lose 3 trades in a row in order to stay above. And if we lose 3 in a row, basically we'd be losing. It's not very often that happens. It does every once in a while, but not really very often. So it helps us to stay in line. It's basically the biggest trade size we could do and stay within parameters of prop firm challenges. Okay, so let's actually talk about the actual results of my back testing here. Okay, so basically I back tested the full year of 2023, tried to make it as legit as possible, but as you can see, there were a lot. So a lot of trades. Okay, and the first trade starts at the bottom. So what I did here is I color-coded each phase of a prop firm challenge. So this would be the first phase passed, second phase passed, first phase, second phase, and then this is actually when we would go outside the parameters. We'd lose that challenge, or we'd lose whatever account that we were currently trading with because we went below that 10% static stop loss. So it does happen occasionally. So you're not going to win every single time. But what this assumes is that you're basically running a prop firm challenge 100% of the time, even if you are already trading a live account through a prop firm. So here I won one. So right here, I would have started trading a new challenge, but I'd also be making the exact same trades on the account that I earned from the previous. So, and then you just keep repeating until you lose them. So that's assuming that. So again, assuming that we're using $100,000 accounts, or we're trying to use $100,000 prop firm challenges. We're spending about 500, give or take. Usually it's a little less, but we're assuming that we're spending about $500 per $100,000 prop firm challenge. Over the course of the year, we would have spent $8,500 on, 19 challenges? $8,500 on prop firm challenges. So that $8,500, that's actually our investment into this. Okay. So this section here, this is where we've passed our first or would have passed our first prop firm challenge. And you can see here, if I do that, it's about 13.8 that ended up being. Okay, and then right here, we're taking another prop firm challenge, but we're also trading this account that we earned from the first prop firm challenge. So we're doing two things at once. So this is all profit here. Okay, we passed the second one here. And this also assumes that with whatever live accounts we're trading with, we withdraw whatever we're able to once we pass another challenge. So right here, we would have been able to pick up $14,407. Okay. So now at this point, so we've won two. So we're trading two live accounts, and we are also doing another challenge at the same time. So two live accounts and one challenge. We end up losing. So we lose both of those accounts, and we don't make any money on, and we failed that challenge. We passed the first phase here, work on the second phase, drew it down again, so we lost that one too. Okay, now this time we won one, and then we won two, take that money out that we earned. Okay, same thing. So now we won another one, and now we have two accounts we get to draw from. So each account would be worth $23,000, so $46,000 total. And then same thing, just keep that going. So now we have three accounts, so we're able to pull a total of $40,000 from three accounts that time. Keep going. Now we have four accounts that we're able to pull money from, which we're able to pull almost $67,000 from. Okay. Same thing, keep going. Okay, so I guess we're assuming that we pull money out every time we pass a phase. Okay. So we had five at this point. So we pulled $41,000 total, and then we lost all of those. So now we're starting over. So now we have one, passed it, have one. Now we have two. We pull the money from the one, and so on, until we get to the end of the year, in which we ultimately, when we add all of that up, we ended up with $250,000. Now, obviously, prop firms don't allow you to keep all of that. Pretty standard rate is you keep 80%. 80% of $250,000 is $200,000, which I have right here. So that is the actual amount that we would have been paid out. Okay. So basically, we paid $8,500 of our own money to spend on prop firm challenges, we were able to get paid out from those prop firms $200,094. So that equates to a 2,254.5% return on investment overall. Now, obviously, that it's not going to be quite like that. This doesn't take into account what am I thinking of? Commissions. This doesn't take into account commissions or spreads. So, I mean, that's going to put a dent. So if we're being generous, I mean, we could, I don't know, lower this 200%, but still, that's going to be still an astronomical amount. So, yeah. So now we have $200,000 of our own money, which we don't have to worry about losing our account if we draw it down too much. So I have this little calculator here. So now we have $200,000 of our own money. Okay. And since we, by the way, the average increase per month is 11%. But so that's important here. So since we don't have to worry about drawing down our account and losing our account with our own money, we can double our position size. And so we can actually average this out to be 22%, and we keep 100% of what we make. So on $200,000 account, after a year of trading this strategy, we would have made almost $1.2 million in a year trading our own money. So basically make $200,000 in the first year and then trade our own money in the second year, make 1.2 the second year. So yeah, that's a strategy, and I'm pretty excited about this. I'm going to keep playing around with it. I am currently going to look at back testing this with the pound yen pair, seeing if we can trade that and gold. But that is the strategy, and these are the results of my back testing. And I hope I can continue to share good news as I continue to do this. Thanks for watching. Like and subscribe if you want to see more strategies, learn more about green charts, and see how to become a profitable trader. Thanks for watching. Bye.